Brent crude didn't just dip, it collapsed. In a single sweep we broke below 72, printing 71.38, a 4-month low. And right now, most traders are staring at the wrong danger zone. They see an oversold RSI, they see a bounce, and they're about to get run over by the strongest trend we've seen in months. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today. Session bias is simple, strong sell, across every time frame. Monthly, weekly, daily, 5-hour, 1 hour, all screaming the same direction. ADX is sitting at 65. That's not a suggestion, that's a freight train. We are in a full trending collapse, and you fade it at your own account's peril. But here's the thing, there is one single number that, if reclaimed, forces the entire structure to reset. Write this down. The pivot, 73.50. If price climbs back above 73.50 on an hourly closing basis, the bearish momentum fractures. Until then, every rally is a sale. Now, where is the herd? Sentiment is overwhelmingly short, RSI at 27, deep into oversold, stochastic scraping 17. In a normal market, that's a bounce signal. But in a high ADX, trend-driven liquidation, oversold can stay oversold for days. The shorts are in control. The pain trade is a sudden, vicious short squeeze that traps late sellers. That's the hidden danger, and it's exactly what our scalping plans are built around. Pull up the weekly chart. This is the geopolitical heartbeat, and right now it's flatlining. Brent had been trading above its 200-week moving average near $83 for most of the year. That's gone. We collapsed through it like it wasn't there, and every major moving average on the weekly is now rolling over into a death cross. The 10-week, 20-week, 50-week, all sloping down, all above current price. This is not a correction. This is a regime change. Drop to the daily. We sliced through the first support, 72.10, without even a pause, and now we are sitting just above the second support at 71.26. The 5-day moving average is at 73.29, acting as dynamic resistance, the 10-day at 75.99 still miles above. This is a breakdown with zero hesitation. MACD on the daily is deeply negative, minus 6.6, with no hidden bullish divergence anywhere. Momentum is confirming the move. Now shift to the 4-hour. Here's where the nuance begins. The 4-hour chart has been printing consistent lower lows. No surprise. But here's what most traders miss. While price just made a fresh low at 71.38, the 4-hour RSI did not make a lower low. Look at the last swing low from a few sessions back. Price was at 72.50, RSI was at 22. Today we hit 71.38, yet RSI is holding at 24. That's a subtle, bullish hidden divergence. It's not a reversal signal by itself, but it is a momentum crack. It tells you the selling pressure is losing steam right at the edge of the abyss. This is the trap. The chart is bearish, but the engine is sputtering. A short covering rally can ignite without warning, and that's exactly what creates the liquidity grab zones we'll trade on the 60-minute. The moving averages confirm the sell. Price is below the 20-period MA, which is below the 60, which is below the 200. That's a bearish alignment stack. The 60-minute MACD remains negative, no cross in sight. So the intraday trend is down, but those oversold oscillators, CCI at minus 130, Williams %R at minus 98, scream that we are stretched to the absolute limit. In this environment, you don't blindly short into the hole. You wait for the structural retest, or you play the bounce from a precise level. Let's lock the key levels. Immediate support is S2, 71.26. Below that, the bearish target is S3, 69.86. That's a massive liquidity pool where stops are sitting. Resistance starts at the old support turned resistance, S1 at 72.10, then the pivot at 73.50, and above that a 1 at 74.34. But today's real battleground is the zone between 71.26 and the pivot. Whoever controls that band, controls the next leg. Let me connect the chart to the news, because this move wasn't born on a technical indicator. The 24-hour headline: oil prices fell 1% to 4-month lows as progress in US-Iran talks cools supply concerns. That is the geopolitical heartbeat shifting. The market has been pricing in a significant risk premium from Iranian supply being locked out. That premium is now being unwound rapidly as a framework deal comes into view. Add to that the analyst article, the oil benchmark named Brent is losing its Brent. This isn't just a price story. It's a structural questioning of the benchmark itself, piling on bearish sentiment. Now, what's priced in? The market is acting as if a deal is imminent and barrels will flow within weeks. That leaves very little room for positive surprises, and a lot of room for disappointment. If the talks stall, we get a violent snapback. That's the asymmetry. Meanwhile, cross-asset linkage is screaming. Risk appetite is dying. Equities are heavy, the dollar is bid, and oil is trading like a risk asset, not just a physical commodity. Brent's correlation with the S&P 500 has spiked. So if you're watching the E-minis fade, you're watching Brent fall in lockstep MY 1 to 2 week directional lean. Sell rallies into that 73.50 pivot, targeting 69.86 initially, and below that the 67 handle. The trend is your friend until 73.50 breaks on a daily close. That is the line in the sand. The only event that can flip this is a headline screaming Iran talks collapse, or a coordinated OPEC emergency cut. Absent that, the path of least resistance is lower, second interaction trigger. Do you think Brent touches $68 this week? Comment yes or no right now. I'm tracking the community's conviction. Most people skip this section. That's exactly where the money is made. Keep watching. I'm giving you 2 scalp strategies and 1 session swing, with exact entries, stops, and targets. Each one is designed for the current volatility regime with an ADX above 60. Execution speed matters. Strategy 1, the opening scalp, scalping, high probability counter trend bounce. This is a sniper's long off the support floor. Price is compressing above 71.26, the second support, and with that 4-hour hidden divergence, a bounce is coiled. The trigger. On the 5-minute chart, I want to see price tag 71.30 exactly, then immediately print a bullish engulfing candle that closes above 71.45. That shows buyers stepping in right at the danger line. Entry goes at the break of that engulfing high, 71.52. Stop loss is tight, 71.25, just 1 tick below the session low and below S2. Take profit 1 is 71.98, just ahead of the first intraday resistance cluster. That's roughly a 1 to 2 risk reward. If momentum rips, take profit 2 at 72.30, near the old S1 level where trap sellers may cover. This scalp is instantly voided if the 5-minute candle closes back below 71.25. Do not hold through a breakdown the opening SCLP entry, 71.52, 5M bullish engulfing break after tapping 71.30, stop loss, 71.25 take profit 1, 71.98 take profit 2, 72.30 risk, reward, ~1:1.9R to TP1 invalidation. Void if any 5M candle closes below 71.25 strategy 2. The liquidity grab, scalping, counter noise short in trend alignment. This is a classic stop hunt short. In a strong bear trend, rallies that break minor swing highs trap early bottom pickers, then reverse viciously. I'm watching the zone just above 72.10. That's where yesterday's late long stops sit. Here's the setup. Price grinds up, takes out the 72.10 level, and prints a spike to 72.25. That's the grab. Then on the 5-minute, we get a bearish engulfing candle closing back below 72.10. Entry on the break of that engulfing low, 72.05. Stop loss at 72.35, just above the grab wick. Take profit is a fast ride to the nearest liquidity pool, 71.42, right above today's low. This is a 1 to 1.5 scalp, but the win rate on these in a trend is high. Warning: this requires fast fingers. If the rejection candle doesn't close below 72.10 within 5 minutes, walk away. The liquidity GRAB entry, 72.05, 5M bearish engulfing break after a spike above 72.10, stop loss, 72.35 take profit 1, 71.42 risk, reward, (1:1.7 are invalidation. Void if price holds above 72.10 for more than 25M candles. Insert interaction cliff. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Strategy 3, the session swing, full trend alignment. This is the trade that captures the next leg lower if the fundamentals continue. The trigger is built around structure, not a 5-minute pop. I want a confirmed breakdown of S2, 71.26, on a 4-hour closing basis. When that 4-hour candle closes below 71.26, the next candle opens with a sell at market entry. Alternatively, if price retests 71.26 as new resistance and offers a bearish rejection on the 4-hour, you can enter there. But the cleanest entry is the break and hold. Stop loss goes above the pivot, at 73.60, above the level that would flip the medium-term view. That gives the trade room to breathe past the noise. Take profit 1 is the S3 level, 69.86. That's the immediate target where profit-taking will emerge. Take profit 2 is 68.50, an extension into the next demand zone. Once price reaches halfway to TP1, around 70.50, move the stop loss to break even. This is your swing management. The entire thesis is invalidated if Brent produces a daily close above 73.50. That would signal a structural shift and a likely short squeeze. The session SWANG entry, market at open of next 4H candle after close below 71.26, or retest rejection entry at 71.26, stop loss, 73.60 take profit 1, 69.86 take profit 2, 68.50 risk, reward, (1:2.3 R to TP1 invalidation. Void if daily close above 73.58 30-second pulse. Never risk more than 1 to 2% per trade. These scalps demand even tighter risk, size down. Stops are non-negotiable. Do not hold through high-impact headlines, especially anything tagged Iran nuclear talks. Protect your capital so you're still standing when the next geopolitical shock hits. That's how you survive to trade the big move. So let's lock in the single most critical level for the next session, 71.26. If we lose that on a 4-hour closing basis, the floodgates open to 69.86 and potentially a 68 handle within days. That is tomorrow's wildcard. Tomorrow we get fresh inventory data and potentially the next soundbite out of Vienna. If the 71.26 floor shatters, the entire monthly trend accelerates lower, and I'll have the updated blueprint exactly 24 hours from now. If you want the full breakdown on gold and how real yields are reacting to this risk-off wave, that video is live now. Tap the end screen, it'll take you straight there. Then loop back to today's S&P 500 breakdown, because the correlation right now is 1-for-1, and understanding equities will make you a sharper oil trader. Hit the bell so tomorrow's alert lands before the London Open. Hold the like button, smash subscribe, every signal helps the algorithm bring you the levels that actually matter.